Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, we are brought to you by Woo. Links available in the description below. And Don, this is a return to tradition episode because not only is the light theme back, but I'm also going to open all the news tabs in the primitive fashion that I always do. So hopefully you feel...
bear market is over.
yeah, hopefully you feel more comfortable and at home. Speaking of feeling more comfortable, I'm sure your position feels a bit better now than it did last week. We went up to 30k on some fake ETF news, and then we pumped back up to 30k without it. So I think the market's at a very interesting point right now. And what better way to move away from the interesting points by going to the monthly time frame first on BTC? Because that's the sort of quintessential lose all interest time frame. We've sort of gone back and forth. So there are 11 days left until the monthly close. So there'll be another episode closer to the close that we can discuss. Have you lost all interest in the 27 to 29 cluster? Because I found myself doing that when I was looking at the monthly earlier today, thinking, well, it wasn't really good resistance. Maybe it won't really be really good support. And it's kind of a nothing burger level. You know, we've been going sideways at 28k for ages now. And I think the clearer monthly signal at this point would actually be a high monthly close, so above 30k. And then that, I think, would open up the door towards some real monthly levels as opposed to these mediocre ones at 35 to 38. So some monthly flip-flopping going on from my side. I'm wondering if your views have changed at all.
No, I mean, I just think these levels are kind of shit. They were bad resistance, the bad support, the whatever. Now it's the only stuff that we really have. That's why we keep talking about them, but I don't really think they matter too much. It matters more that where we're coming from and where we're going, which, I mean, we're coming from 20k, and fingers crossed we're going towards like 35, which is resistance. And then we'll see from there. I think like if we go to 20, that's an interesting level. If we go to 35, that's an interesting level. Anything in between is just whatever, chop.
So we've lost all interest in the midpoint, essentially. 26, 28, all of that. At least on the monthly. I think there's some good arguments to be made on the weekly and the daily for those levels. So that, you know, that's something. But yeah, I agree on the monthly. 20 and sort of mid to high 30s remain interesting. We've been talking about them for like half a year. Can we get a test, please? Just like get us to some decent monthly levels so I can mess up another swing trade and feel bad about it for 6 months, which is totally a joke and not real at all. Speaking of 35, 38, if we break out from 30, and obviously this is counting our chickens before they hatch, is that the idiom? I always mess that one up. I don't know how it works. You have a long colored history of putting a lot of importance into levels, and then when the market gets there, just ignoring them completely, and then caring about them again maybe, and sort of going back and forth. What are the odds that you essentially ignore 35 to 38 if/when we get there? So, I mean, they're quite obvious. That is the big sort of obvious monthly resistance. What would make you not want to de-risk or sell it?
So I'm not gonna sell it directly. I like if we went to 35, closed there, and then kind of had another month that looked shitty. I'm down to de-risk. I'm not gonna sell just because we hit that level without seeing the reaction. So for me, it's kind of like it's a high time frame trade that I have, and I'm not gonna close it on a test. I'd much rather close it if we get a bad close. So. It will look like I'm ignoring them if we go there because I'm gonna wait for the monthly close. And if we're then closing way above it, cool. I'll just keep holding then. And if we're closing at resistance, then I might reconsider my positioning. So it depends.
The argument that comes to mind, almost against that to some extent, or at least a relevant consideration, is that if you took a wait and see candle close approach on the monthly test of 20k, that would have been a very rough position to try to get into, right? Because of the extent of that monthly wick. If we're talking about the March candle, that basically wicked 20k and then closed at 28, which was pretty impressive. So is that just I mean, obviously there were exceptional circumstances around there, but you can't really predict these things. Is there any risk that you sort of marry the monthly close and end up missing out on a reversal candle? Or is that the type of thing where you say, well, it's a monthly level, monthly close is going to be important, but if it starts going very poorly, or something interesting happens on the weekly and the daily, I'll still manage it? I assume you're somewhat flexible in that regard. It's not like I'm going to go into a coma for 4 weeks.
No, I'm always flexible. Like, no matter like what happens, I like the opinion that I have today could be very different tomorrow. So I'm always flexible, but like right now when I'm looking at it, it's a high time frame trade, and I'm most likely not gonna manage it too much. If I get to, like, obviously if there's something crazy happening, if the ETF is denied or whatever, I'll obviously act. But barring that, um, I'll just wait. And I think it kind of depends on which side of the market you're on, really. Like, if you're looking for buys, right, and you see a wick into support, then I mean, might as well buy that monthly level, right? But my targets are higher than that resistance level, so I'm willing to give it more room, basically. So if I was super bearish, I'd probably sell 35 very happily, but I'm not. But I was very bullish into 20K. That's why I was buying it, even though we didn't close at 20K. We just wicked into it. So it depends kind of on my stance. Like, if I have a bullish stance, I'm more than happy to hold into resistances and see how it goes. And if I have a bearish stance, I will probably just always sell the first touch. So it depends.
Yeah, that makes sense. I mean, I have interesting technical follow up stuff, but just to move away and break the fourth wall for a moment, have you been tempted at all to do an early victory lap of sorts, given you got cunted off on Twitter and you still haven't come back? And
I have.
Oh,
I
have you?
posted today.
Oh
Yeah,
gosh, I should really take you off mute. I must have missed that. So yeah, I was just going to ask that question about, like, it certainly got noisy enough for you to leave at some point.
People got dumb for some reason. I don't know why. Like, I mean, I guess I know why, because people lose money, but it's frustrating to deal with it. But no, today I came back and tweeted like the trades, and then I already had people in my comments being like, you didn't tell me that you bought," and I'm like, I'm just lost for words. I don't get it. Like, we've been talking about like my position on this show for weeks. I tweeted about it a bunch, but apparently it's still not obvious enough what I'm doing to people, which is also quite funny to think about, that they feel the entitlement to actually know all of my positions when I'm taking them, the minute I'm taking them. Like, that just seems odd when you think about it. It's not like I'm being paid.
Well, I think it's because there's so much LARPing on Twitter about positioning. Like, you can map out some levels, and then the market moves, and then it's quite frequent and common for people to follow up on their chart and say, I win, basically,
Yes.
or some version of that. So I think people's bar for what it means to talk about your positions is artificially low. And I say artificially because a lot of the time that's just sort of a sleight of hand where you just post a chart, and if it moves basically and hits one of the levels, then miraculously you've established a position. It's quite rare to see a very explicit sort of I'm long, I'm short at this price or whatever. And I agree, there's no real incentive to do that. And also, a lot of the time, it's just kind of not true, or at least kind of done after the fact. So, the market's moved 1, 2, 3%, and then they'll show their entry. And then people take that as a sort of valid signal. It's so confusing, but I guess it's a pointless discussion, right? Bigger picture, I think if you watch Casual Friday, at least, I do enough grilling to really get to the nitty gritty of it. And if there's one thing that's been absent from all of it, is, I think, ambiguity. I mean, in that episode where we were at the weekly bottom, I was literally asking about your exact execution and how you got your average and that type of stuff. If that's not clear, and people are expecting spoon feeding on Twitter, then, I mean, God help them, right? You probably don't want those people anyway. But we are speaking to our wonderful Casual Friday audience, so we know they are immune from such pestering.
I mean, the funny thing is also that, like, I have been to kind of avoid all of that, like, accusation of LARPing, whatever, because I hate these people, right? Like, I hate what you described, the ones where you like only post about your positions if it's already moved in your favor, like these low time frame warriors, right? That are like so good at trading low time frames, that but only post like 15, 20 minutes after the entry on like an hourly trade where it's already moved like 5%. Like, I'm sorry, but like you can post whatever, right? So I hate that. And that's why I did the whole like trading on like kind of copy trading myself on Woo. And I mean, that's public, right? So like, I don't really understand how people can miss positioning of mine when they can literally see it on the Woo leaderboard. I just don't get it, but it's what it is. So,
yeah, I'm also wondering, for someone who's the way you are in my mind is kind of 1 foot out of this thing. You're increasingly off Twitter and just in general. Ideologically, you've gone off quite a few times about how you don't find the actors in the space and the space itself particularly palatable. We're very much in different points when it comes to that. But I'm just wondering, knowing your view on all of this, if I'm someone else, you have to ask, what would his incentive be to just like LARP about weird trades? Because it flies in contravention to basically every other bit of conduct and historically how you and this show has done things. It's just a very strange assumption. I think it's one of those poison well things where it's so common on Twitter. You're almost, and I can understand this, you're better off in the interest of safety and accuracy, assuming that someone is LARPing because they are more likely to be than not. And then, if you're not, you get caught in that outlier net. But yeah, enough complaining about shadow boxing cyberbullies, Don.
Yeah.
I think that, the value of the show is that we, as my favorite SoundCloud rappers say, keep it real. So we should probably continue down on that path. But yeah, I just wanted to give a bit of space for at least a preemptive small victory lap, because I know that those comments and the overall Twitter experience became a bit cumbersome. So hopefully this provided some relief of some sort.
Always,
or
nice.
At least the PNL does so.
Yeah, it does. It does help, but it's always nice to like, I don't know, like that's the only time where I'm kind of happy about other people's misery. Literally, I don't ever have that, but the only times I ever like have it is when people comment dumb shit and then price moves against them. Like, for some reason, that makes me very happy. So it's the only time in my life where I get to enjoy other people's misery, and I do like it. So I mean, it is what it is at the end of the day.
Yeah, I almost take the claims of sort of deliberate ambiguity personally, because Casual Friday has just turned into an interview show, and so indirectly that's insulting me by implying that I didn't get to the bottom of things when it came to sort of your positioning or views on the market, which, not a very nice thing to do. Nonetheless, let's go back to some relevant BTC timeframes, and I'm sure we'll revisit that discussion. So the weekly, this one was pretty important. I think the last Casual Friday episode was pretty much at the stone cold bottom at 26.7. I think I even made the argument that if you subscribe to Don's high time frame view and you want to flex on him with a better entry for this specific rotation, the proximity to invalidation was pretty high when we were recording Casual Friday there. Naturally, I absolutely fluffed this move and didn't do well, but in terms of the TA, that was a really nice weekly retest. It's quite cruel in that the bounce was very technical from the cluster bottom, but then, if you're looking at it from a weekly time frame, it gave you absolutely no chance if you wanted to catch the move to 30k since then, right? We had like the fake news ETF and then the grind up after that. I will say, however, my previous sort of FUD level, which was the 28.1, 28.2 monthly, weekly midpoint, that was surgical as far as acting as an inflection point. And that's really what I wanted to see post-Wick follow-up. That level get flipped. We spoke about it in the newsletter as well, I think. We have the same daily level. So if we sort of zoom out and look at this thing, at least on the weekly, and the daily says the same thing, what we have is that the market grinded at the range low, got rejected at the range midpoint, which looked pretty rough for a while, and then pretty much in 1 week has reclaimed the range midpoint and is now approaching the range high type of thing. So it is, obviously there's a lot of context that goes around it that makes it pretty tricky with the fake news and all this other stuff. But in terms of how this range has played out, I think it's been reasonably technical so far. Do you agree?
Yeah, I generally like how it's been playing out. Like, this is exactly how I wish it to be. But yeah, it's like when you look at the weekly, it's obviously not been really giving entries other than you bought the support that we talked about last week, and made massive gains. This is why I hate breakout trading. Is what we talked about last week too. Like if you're actually trading from a higher time frame perspective, or if you're not glued to your computer all the time, these kind of moves you just miss, right? At least like if you look on the weekly, this honestly, like this move that gave quite a few entry points on the daily, in my opinion. But on the weekly time frame, obviously quite hard to get into, but quite nice. I like it. I like it when it gets rejected at the range high, so to speak, goes to range low, and then completely breaks the range. That's quite nice, and it's been doing that quite nicely, in my opinion.
It's also one of those classic patterns that if you traded, especially in like 2018, 2019, you're really used to. The kind of wick backfill, right? So when
on the daily time frame.
Yeah. So when the market puts in like a big wick and closes, well, by definition, away from it, it's not uncommon for all sorts of inefficiency, volume profile, cope reasons that the market comes in and sort of backfills or refills a portion of that wick. And it happens in both directions, happens to the downside as well. Like, for example, the bit of price action that I thought of immediately was the 14th of March so-called SFP, if you remember that. I think you were commenting quite a lot on Twitter that it wasn't a bearish SFP at the time, which was a good call. But that was pretty similar, that it looks like the nastiest thing in the world, but then the market just grinds up to fill in that area. Happens on to the downside as well, we see. So this is a pattern in crypto for miscellaneous reasons that tends to work more often than not. I mean, even the sort of 17th of August big dump, right? That wick got filled at the end of it, or by the time the rotation sort of played out before the market consolidated and moved higher. So it's one of those very the reason I bring it up is because it's one of those counterintuitive things, right? Like if you sort of baby pips 101 TA type of thing, and you use your candlestick chart pattern recognition, learn a bunch of Japanese from your textbook, you might think that big wick equals big rejection, right? Or something of that nature. Whereas a lot of the time, at least in crypto, contextually, if you see that big wick, it comes back to that old trading wisdom that, if it prints there, it'll trade there. So you see those wicks, it's not unusual for price to revisit those same points. And that's sort of what we're seeing now. I do want to ask, though, in the context of this larger range, so we sort of talked about the chronology of the range, if you will, where it came to the range low, really tried to break it, but then I think the key reversal was the 11th of September week that spiked that month of lows and closed above, and it's kind of been positive since then on the weekly time frame. So the range low tried to break, and it wasn't successful, and the market reversed. Why doesn't that logic apply to the range high? We tried just like we tried to break down and failed and went up. Why can't we try to break out, fail, and go down? Or at least, why do you think there's an asymmetry there, given your targets are higher?
I think because we broke the important levels already. So like if you look on, like for me at least, like if you go to an area, especially like when it's like one that is so important as like 30K has been, if you go to it like one or two times, like okay, you can get like you go there once, you get rejected, you go there again, you can get rejected again. The third or fourth or fifth time, I just don't trust, right? Like that's a little bit excessive, and that's kind of what we're doing right now. We're testing 30K for the third time. We tested the support twice, right? Which to some people is already too much. For me, that's still okay. So I think in general, the chances of it breaking out, the more often it tests that resistance, are higher. So in this current situation, I would say like the chances of breaking out above 30K is higher than the one that we had back at 25K to break down. But I still think to me, I mean, there's still a chance that this breaks down, right? There's still a chance that 30K holds, like the head and shoulders meme people win. Like there's a chance. I just think the upside of being in a position that is and like a good position is so much higher than the downside of like giving back a few percent of the gains. Basically, I think there's quite substantially less than a 50% chance that this breaks down, as in like you have the odds in your favor. And then what happens if 30K breaks? I think there's a good chance it goes to 40, 45. And that's much, much better on a from like a trade perspective than being like, oh, 30K is going to hold again and I'm targeting like 27 or whatever. That seems like a shitty trading comparison to take. I'd rather be on the bullish side, give back all the gains that I've made, and go from there. Like, that's just kind of my view on it. But I still can break down this. Like, you could literally draw a massive head and shoulders here, be like, this is the right shoulder and this is going to whatever 20K. But I just don't subscribe to it. I don't think it's the best trade to take, but could be wrong.
So 30K is FUD is the prevailing
Yes.
view. What would it look like, if it did turn around here? What would the early warning signs be, either on the weekly and on the daily? And I guess a supplementary question to that, have you adjusted any stops, either in terms of just mental invalidation or in terms of literal orders, not necessarily the exact, hey, give us your stop so I can wick it type of thing. But as this thing has developed, has your invalidation developed as well? But I guess, two-parter, what would make it start looking bad? And what's your protection against that if it's changed at all?
So if we start, like if you get it close below 26.8K, that's a really, really bad look. So that's basically, I'd be
It's a lot
more
of
than
space,
happy.
eh?
Yes.
Okay.
But that's the good part about like having a decent entry. Like that's a very, very good invalidation in my opinion. And it basically takes me a little bit below my entry, which I'm okay with. Like that's the nice part about getting a good entry. And then if we go back down there, then you have the same situation that you have here, right? Like you test the support 3 times, and technically we're coming from out of bear market, right? So you can make a strong argument that that third test that's going to break down. So I'm not willing to chance that, so I'm gonna close and then just leave it be for a while. And then if it goes up, cool. If it goes down, cool. I don't care at that point anymore. So that's kind of what I'm looking at. But yeah, it obviously can change, right? But if you look, I mean, that's all based on the daily. The time frame that I really like the most is the weekly. The time frame that I really like is the daily time frame. And that's because we basically like we're all the way back to where we were consolidating before the breakdown, right? And if there's one thing that I don't want to see when I'm bearish, is basically a range reclaim, and that's what we're doing right now or trying to do. So depending on how today closes, we're basically back in the old range between like 29.2 to 29.8 or something. That range before we broke down. And yeah, that's bad news for bears in my opinion. Like you should really not come back there if it was bearish. In my opinion, if it was bearish, it should have turned around 28.5 and shouldn't have gone to 30K. And the fact that we are doing like pushing into those areas is a good sign, and not like okay, this is crazy high sign to me anyway. Like I don't see all the bearishness people keep talking about. The same with the wick, right? When you think about it, like that wick is one on a technical level. Oftentimes you get these massive wicks and then they get backfilled, like you talked about. But also, just from what that wick actually represents, is just a bunch of people were very poorly positioned for an ETF approval, right? And we got the news that okay, there's an ETF, like a Bitcoin ETF that is approved, and that led to the market pumping like crazy. And it was false news, not true. But what it shows is basically there was a bunch of people just shorting willy-nilly in the middle of nowhere, and also that a bunch of people, and especially like bigger funds and like bigger players, they're just not really positioned right for a Bitcoin ETF approval kind of news event, because they wouldn't even have had the chance to buy in. You cannot be that quick, and the market is quite thin. So to me at least, it made a lot of sense to backfill that wick, because a bunch of people are basically like they got to see the future in, like, when you look at it that way. Like, because most people, most bigger players, and I think at this point even the smaller players, agree that we're going to get a Bitcoin ETF relatively soonish. And then you kind of got to see what would happen to price, and if you don't have a proper position, then that's going to make you take that proper position. It's kind of like a gift from God, so to speak, because otherwise, I mean, this thing would have just ran without you. And that's kind of what happened too. Like a bunch of people basically bought back. You could see that it was less derivatives driven and more like spot driven. A bunch of people just buying basically. And it's the first good price action we've had in quite a while. And it makes sense to me. Like this entire move the last 2 days made a lot of sense to me. Like whenever you get these kind of like eye-opening moments, people shift gears and people start acting differently. And that's what we've been seeing. And that's price action that I like. And then you're gonna see, like, if you go on the on like Binance or whatever, what happened is that we took out the high of the wick, right? And now it's kind of selling off, and people are like, oh, this is now an SFP, whatever. And it's the same kind of dumb argument again. I think makes no sense. Like this is, if anything, it makes sense to be bearish a little bit lower. Like if this pump retraces the last 2 days, fully retrace, if you want to be like a bear tart, you don't give back too much by being by waiting for that and then be my guest. It seems much better to short low in this instance than short here, where a bunch of people are trying to catch the top of something that they don't really understand.
So the Cointelegraph intern, he wasn't wrong, Don. He was just early, is what you're saying.
Yes, I mean,
free my man.
Yeah, that whole story is just absurd. I'm guessing we're going to talk about it on the news front. Not sure what you have prepared, but that's just fucking wild. That whole arc. Imagine just posting something that you haven't researched yourself, just a rumor, and then the market moves 10%. You must be shitting yourself.
Yeah, that must be pretty terrifying. I also completely doubt that there was like the intern themselves were insider trading on it or something of that nature. There was a bit of a dodgy TWAP leading into it, but I don't know if that's just by mere coincidence or not.
No, I think I'm pretty sure it was either like someone knew how to manipulate that person at Cointelegraph into basically doing something that, like, tweeting this, or like was just nothing, as in, like, because the market was going up before, right? And I think there was good reasons to go up too. So it's not like people are like, oh, the market turned around because someone was preparing for this thing to hit. I don't think like that's too far. Like people like the conspiracy theories, and that's why they kind of like jump into that. But I think that's unreasonable to expect. If anything, someone was manipulating that poor guy. I very much doubt there was insider trading involved. If anything, like on a small scale, where like before the tweet hit, like a tiny position got taken on by an intern somewhere. Wouldn't be surprised if that happens, but nothing on the scale that people seem to make out. Like they're like, this TWAP was based on that. I don't know. Doesn't seem likely to me.
I mean, we all know TA predicted the fake tweet, Don, because that's how TA works, right? I mean, that is my favorite. We love bashing TA on this show as TA traders.
Yes.
But there were way too many people coming out and making the argument that, oh yeah, my TA predicted this. It was so obvious. It was this 3-wave 618 retrace, inverted head and shoulders in a 5-minute. It's like, dude, your TA does not predict fake news and ask side book depth across the board dropping to single-digit BTC, you know? Because that's how you get these wicks. It's not like, oh, we moved up so quickly because there was so much buying. That's not entirely correct, right? It's like there's like a moderate amount of buying and a lot of short closing all at the same time, but the ask side is empty. So those market buy orders from people buying the news plus those shorts closing becoming market buys and or top of book sort of limit buys, they need to get filled somewhere. And those are kind of urgent orders that take liquidity. But if no one's providing liquidity, then price is just going to keep having to go as high as it has to in order to fill all, that flood of buy orders coming in at the same time. That's where you get the moves. It's not a function of like just huge buying eating up massive sell balls. It's a function of illiquidity and a sort of demand for liquidity where there isn't any, right?
Sellers ran out of tokens.
Sellers literally just did not want to. Yeah, because it makes sense from just like almost an intuitive point of view. You see this news come out. If you have limit orders resting 1, 2, 3, 5%, limit sell orders resting in the book, you're going to pull those immediately because you're like, I don't want any of this flow, right? And that's from traders, from market makers. Obviously, the shorts closing, the momentum buyers. It just creates this perfect torrent of toxic flow to some extent, and into an already illiquid market, made even more illiquid, and that's how you get these sorts of moves. And your TA does not predict that. Even if your TA was generally path dependent and correct directionally, like I think we're going to go up, it doesn't predict. It can't predict this type of stuff on a microstructural level. You know, it's self-delusion. But yeah, that's fun. Makes sense as far as BTC goes. I'm going to ask you your least favorite question, Don. Are you ready?
Please.
Here it goes. Don, you were so right. I'm sorry for talking shit in your DMs. How do I get an entry now, please?
Fuck if I know. I like literally have no
you
idea.
You don't.
Like if you buy here 29.7, I mean that's literally the last bastion of hope that the bears have. So technically, like if this turns around, it would be this point. So if you're buying here, you'd be buying the Pico top. Now the chance of this being the Pico top, in my opinion, is quite low. That's why I'm betting on upside, right? But I don't want to push anyone into like buying the Pico top. But also if this retraces on the daily time frame, right? If you're like, oh, I want to buy a retrace. And this is actually something I said on Wednesday, right? Someone was like, should I be buying like here 28.4? And I was like, dude, I have no idea. Like I bought lower. We're technically at resistance. Do I think it goes high? Yes, but I don't know. Now we're trading at 29 point something, 29.7 or something. And if it retraces, like I said back then, like if it retraces any further, like if you want to pull back, if it goes too far, like it's just bearish, right? Like it should bounce from basically here. But also you're buying resistance, right? So it's shit. It's the same situation again right here, where if you're waiting at 28.7 or something, which is the nearest daily support that I have, like if this goes all the way back to 28.7, like I'm actually getting worried for the market. So would I actually want to buy there? Probably not. Now, do you want to buy into the only resistance that the bears have left to be able to kind of smack this down? Kind of also sucks, right? That's why, like, once I have a position, it's for me, it's really hard to kind of be like, oh yeah, you can get on board when this and that happens, because oftentimes I try to get the positions before the explosive moves. And if you go and zoom out to the left, like 16K, like people were like, oh, what can I do now? Like now that we're trading at 20K, right? When I bought 16K, it went to 20K. And I was like, I cannot really tell you anything good, because this should not pull back too far low. You're buying into like a massive green candle. Like I just suck at this kind of trading. So the answer to the question is, as sad as that sounds, it's just like, I don't know. If this pulls back further, I'd be worried. Like if it pulls back too far, do you want to buy into the only resistance on the chart? Probably not. But yeah, I don't know if you can handle it better. I think if like you're most definitely better at breakout trading than me, because I don't even look at the low time frames too much. I don't understand like the breakout trading thing in general. Like it's very, 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 very hard for me. So I just don't know.
Sorry, I stopped listening at "you're better than me" at X. My brain just switched off. But I think you sort of landed at something important, that in popular sort of current trading circles, the way you do things is that you just reassure your Twitter following, YouTube following, whatever, that it's impossible to miss a move and that you can get on board no matter what, right? And we see this with people who have 20 levels on their charts, and this happens with beginner traders as well. Like I'm in a few trading discords, and there are some newer traders there. And the first thing you can always tell is if they've got a level every 0.5%. And they want that certainty that every single move in the market is explainable and also tradable, which I think is not a helpful way to look at it. But there's also this false confidence that comes with it. They're like, oh, if you missed a move, don't worry, you can just like do this and you'll be fine. Or like if you get stopped out, don't worry, you haven't actually lost. You can just flip and then do this and go the other direction and you'll be fine. And it just creates this like fake cushioning around the market that no matter what happens, you can either catch the move if you're late and make money, or if you're wrong, you can flip the move and make money that way, which is why, of course, that's so realistic that nobody ever loses money in trading, because they just, the old switcheroo in reverse. I just don't think that's a helpful way to look at the market. And the harsh reality is that sometimes you will just miss moves, and there's no straightforward way of getting back on board or catching the rest of it in a way that makes sense in like a risk-adjusted manner. That's just the reality, right? Like if there was a good entry and the market's moved significantly from that entry, then if sometimes you just assess the relative risk reward and think, you know what, the chunk of this is done, or the obvious portion of this is done, and there's nothing here for me. I just think it's really tempting, and again, really popular nowadays, to delude yourself into thinking that every single move is tradable. Even if you're late to a move, you can trade it. If you're wrong to a move, you can trade it and make money. It's like, dude, just stop. You can't trade your way out of every single mistake or mistrade that you make. But apparently I'm wrong about that. So
no, I 100% agree. Like it's just I don't know, like sometimes, and this happens, right? Like sometimes you see something rip and you're like, fuck. And then you check, like, can I get on this with like a risk defined setup? Because you're like, oh, this goes up now. And oftentimes the answer to that is no, right? Like there's no good risk defined setup to take anymore. Like, do you want to take a trade where your stop is like 15-20% away? And if so, maybe you take it, but then your position size has to reflect that, so it's like inconsequential at the end of the day anyway. Like I 100% agree with you that you can miss trades, and sometimes that leads to you just being sidelined for a massive move. And I think that's why I have like some urgency sometimes. Like you hear me talk about, like, I want to have a position because I don't know how to get on this move if I don't have one, right? And yeah, it's just as straightforward as that. Like if I miss a good chunk of it because I'm like, no, I can just buy higher, whatever, sometimes it's just know how it plays out, and then you're just sidelined. And for example, like if I tell you to buy 30k here as like a resistance breakout play, whatever, that could play out, right? You could trade through 30 into 35k, but then 35k could be resistance, and you could be down below 30k in 4 hours, right? Happens all the time. So basically your entry was decent, but like just you have to trade manage it. And if I already have a position from lower that I don't have to trade manage because it is lower, I generally don't like to give any advice on that front, because it's just kind of shitty, right? Like if you enter at 30k for the breakout play, it breaks out, goes to 35, it goes all the way back to 30. Who am I to tell you that you should be holding or selling? Because I mean, we're in a completely different position, and I just don't like doing that. So for me, oftentimes if I take a position, it's because there's not going to be a way for me to get into the trade at any other point in time.
Yeah, it sort of becomes its own no trade zone, right? Where now that you've established an entry and the market's moved, it hasn't gone far enough to sort of hit your target or give you reasons to be concerned, but it's also not close enough to your entry to recreate the same trade in a risk-defined fashion. So it's just like a no trade zone because I was too busy buying during the trade zone than doing anything else. It makes sense. Also, I think this approach of you should never have FOMO, you can catch the move no matter what, I can understand where it's coming from. Like, I'm not blind to that. I can understand at least the intention of not getting people, obsessed with trading every single move or whatever. But I feel like it's been taken too far. And nowadays, there's just a ton of complacency around trading, if that makes sense, where no level is like particularly important. No setup is like that great because, hey, worst comes to worst, I'll just buy the confirmation or sell the confirmation or follow up on the breakout, follow up on the breakdown type of thing. And that's just not, I think, conducive to good long-term trading habits. I think you'd be better off like picking your spots more selectively and focusing on your execution in those spots rather than living in this cushy world where, again, you can't miss a move. If you do, you can just flip. You can't get invalidated because if you do, you just flip. And also, every level is tradable because if it bounces off this one, I can just, add when it reclaims the other one type of thing. It's just such a noisy way of trading. I guess that's what a lot of it comes down to. Think about all the shit you have to basically consider if you trade that type of with that type of mentality. You need like 50 levels on your charts. You need like 50 scenarios on those charts as well, in case it turns into a reclaim or a failed breakdown, or it gets invalidated, then revalidated, etc. And basically everything turns into noise. Well, everything turns into signal, which by definition means everything turns into noise, right? Whereas if you're much more selective and you're like, these are the spots that I think are really important, these are the areas where I want to do business, and if I'm right about the magnitude of this move, then the resistance 1, 2, 5% away, I'm going to expect it to break, because if it doesn't, then I'm wrong anyway. Then suddenly your ideas are much clearer. Your execution is much tighter, because you're only working with 1, 2, maybe 3 ideas, and your levels and your charts and just your thinking also opens up, because when fewer things matter, you can really focus on them. So I mean, that's my preferred approach. You can obviously many ways to skin a cat. That's an idiom. Don't skin any cats. Animal welfare is important. But I feel like we have some recurring themes on this show that I hope are important and that we managed to get across. And this idea of 50 plans, 50 levels, nothing matters. Everything matters, therefore nothing matters. I really hope that's one of the things that we get across in a somewhat compelling fashion. Okay, so
I mean, if you want an example of like being like that, some things just run away from you. I just look at ETH/USD on the weekly time frame and look how it went from 400 to 5K in between November 20 and May 21. Like, where the fuck is your retest? Where the fuck are your levels that would have helped you to get in on this? They don't exist. Like, there's nothing. Like, you could argue like, hey, I missed out on buying like 400, so like now I bought like 1.4K because there's a retest of the all-time high. But like realistically, like if you missed out on the move from 400 to 1.4K, are you gonna buy 1.4K as an all-time high retest, or are you gonna be like, this ran like 10x from the bottom, why the fuck would I be buying it? And the answer to that question is more often than not, like if you sat on the sidelines, that you're not willing to take that trade, right? And then there was really no time where you got like a decent retest-ish on that weekly chart. And when you get it, which you could argue like we've had now, right, we went all the way back down to 1K, which is back in the all-time high region, whatever. At that point, you don't really want to buy anymore anyway. So like you can miss trades, and there's not going to be a way to get back into them at all. And that's how it just sometimes goes. The good thing with crypto is that it's all vapor anyway. So if you miss a trade, and even if you miss an entire cycle, there's going to be a next cycle that you can trade. And the coin that you missed your kind of entry on probably goes down 99% at some point anyway. So there's no real need to worry about that. It's just a missed trade, right?
That's like that classic meme, Don, where you have this big high time frame level of support and then or resistance, and the market finally breaks it, and you're like, okay, that's it. The level's been broken. Broken resistance has turned to support. When it retests, I'm going to go all in, and then it runs up 1,000%. And then by the time it retests, it's like the end of the cycle and doesn't do shit anyway. It's like a classic crypto thing. I completely understand where that comes from. I think to step away from the philosophical pontification for a moment, the only things that make sense to me on lower time frames, like the 4 hour, I agree with you that if this thing starts to retrace too much, it kind of starts to look bad. I don't even really want to see 28.1, 28.2 retested. Because that seemingly is, if you want a level that's basically done its job at this point on both sides of the market, that's really it. So then the question would be, why are we just giving back this entire chunk of momentum? Maybe based on a proximity to invalidation type of setup, that might be puntable on lower timeframes. But for high timeframe momentum, it's either shallow pullbacks or no pullbacks are the only, I think, palatable options. As far as what shallow pullbacks would look like, this is me reaching, so by definition, it's going to be less compelling. But I don't really fully dislike the former 4 hour range low at like 28.8-ish, maybe 29K, something of that nature. If we take the 4 hour range we've sort of reclaimed now, 28.8 is the range low, and roughly 29.8 is the range high, depending on how you delineate it. So either the range low there, although that's already in retest territory at 28.8, or maybe, and this is very tangential, the range midpoint actually at 29.2-ish. Those are the only shallow pullbacks that at least have some sort of technical backing. Everything else, there's either no support or it's pulled back too far to be considered a momentum-driven move, I think. So
Yeah.
that's me reaching, because again, it's one of those really tricky areas where we've kind of refilled the wick, we've spiked it, we retested 30k round number. I'm not oblivious to the fact that there is resistance in this area, but I think if your argument is that this is going to be the move that breaks 30k, your only appetite should be for shallow pullbacks or no pullbacks.
Yep.
So those are the levels that make sense to me. I am slightly more cautious about 30k than you are, which is probably a signal in itself that it's going to get completely flattened. But just in terms of symmetry in this range, we had a very defined range low failed breakdown, and we haven't had anything as comparable at the range high. So for example, we had like the weekly close below, we spiked 4 weeks worth of lows. There's a lot of sort of price action at the range low before that reversal. Whereas if you look at what happened at 30k from April, we kind of had one mini close above, retest, and then we went back down. And we're coming in for a fresh test of that level since then. The good news is, I think the classic trope of double fake outs are rare applies in this instance. So a weekly close above 30k would be much likely to be a sort of another failed breakout and much more likely to be real. Of course, the counter argument to that is if weekly 30k breaks, you're not getting a particularly good entry breakout trading that, unless you're some low time frame maestro. I do also want to point out, again, in the interests of balance, if you will, as Don is, resident bull, one nightmare scenario that I have, and nightmare is obviously hyperbole, is that given there's weekly and monthly resistance around like 34, 35-ish, whatever that former all-time high range is, I think one particularly hideous chart construction would be a 30k breakout. So we break above the round number, it all looks really good, high on the weekly, that ends up hitting that area of monthly resistance, maybe even wicking higher to 35, 36 or whatever, and then closing back within the 30k weekly range. I think that would be a really rough view, and it would basically morph into a weekly failed breakout off the back of a monthly retest of resistance, and that would be pretty dire. So
I actually agree, yeah.
Yeah, so those are kind of the only things floating in my mind. Just to summarize that, I think lower time frame, this area is tricky. We've refilled the wick. We're up at 30k. The intraday pullback levels are a bit tricky. There are some, but they're not the best. If you're a bull, ideally you're already positioned, and your alternative is either a shallow pullback, as mentioned, or 30k breakout trade. And the biggest risk to those are either just no pullbacks breakout that completely shafts you and it's hard to get an entry, or if you do get a breakout trade, that it ends up getting filled more or less closer to monthly resistance than the actual breakout point. And then if that does its job, you're in a very, very rough state. This is kind of an objection, and again, I'm almost bear-tarding here, but this has been my objection to 30k breakout trading for some time now, because I've always kind of zoomed out and asked myself, okay, well, what do you breakout trading into if you breakout trade 30k? And the answer is monthly resistance. So the bearish argument is that, yeah, even if 30k breaks, it could end up as a failed breakout, and the odds of that are higher than usual for a breakout because you're breaking out into a monthly level of resistance. That's kind of the bearish argument. And of course, the countervailing consideration to that is if you keep adding resistance levels, you'll just never buy, right? It's like, okay, 30k is resistance, but it's broken. Okay, but we're in monthly 32 now. Okay, it's broken, but there's also monthly at 35. Do you know what I mean? And you kind of just keep moving it up, and then you blink and it's like 36, 37, 38. You've been wanting to be a bull since 30k, but you've sort of fudded yourself out of putting on a position. So I know that's a very messy kind of back and forth and maybe not useful at all, but I think those are some of the relevant considerations when it comes to this thing.
Yeah, I mean, I'm on board with all of that. Like, I would hate a breakout that gets full retraced. That's one way to get me back in the bear camp, or at least to get me to sell my positions. So that's what I mean with, like, we just have to wait and see, because kind of like, I mean, there's always ways to make me sell, and there's always ways to make me buy, no matter how bullish or bearish I am, just depending on recent price action. So.
Yeah. So I guess the overall Bitcoin summary would be some version of point number one, being above 28.1, 28.2 is a good sign. Point number two, this current area is pretty tricky because we've sort of refilled the wick and it's bears arguably last stand on the daily time frame, aside from the extremity, which is 29.8 daily resistance. Point number three, if you're bullish / momentum continuation oriented, your only options are either no pullback or shallow pullback, and anything that sort of retraces the last 2 days is probably off the table, because that would be, it would still look okay, but it would certainly start shifting the odds a little bit. And then point number four, stuff to look out for would be either a failed breakout from 30K that then dips back within the range. And I guess point number 4.1, it would be especially worth being cautious. That's an awful sentence in English. I apologize to all my teachers, past, present, and future. A special degree of caution is warranted if the 30K failed breakout comes as a result of a test of monthly resistance. I think that's most of the points, if not all of them. Have I missed anything important?
No, I think that's it.
Okay. Great. What do you think, just as a final note, of the 4-hour construction of the range we're reclaiming? Because I know it's not really, there's not really much going on the daily time frame when it comes to like 28.8-ish, or however I drew that. 28.8 to the other side of that at 29.7, 29.8. Do you think that's valid technically? Is it better to have something rather than nothing? Or is this kind of 4-hour nonsense out of your enlightened purview as a weekly time frame breakout trader?
No, I mean, when I look at the 4-hour, right, and you have that previous range to the left in July, we hit range high in the last few hours. We're rejecting from it right now, and you could, I think, like, if you're like this most cautious bull, but you still think the market goes up, you could be like, okay, I want to buy 28 what is it, 8, I think, the range low. But honestly, I don't think that's gonna hit. Like, if it's gonna hit, that's very, very close to invalidation, so it's a decent setup. But yeah, I don't think it's very likely to hit. So that's kind of like the rough one. And then I think you basically, I mean, you could draw a midpoint of that range to the left, and I think that's basically where you'd expect support to come in. And if that doesn't come in, like I said, range lows in play, possibly. But yeah, for me, I'm just a little bit more zoomed out. I mean, for me, it just makes sense to go up. I still think, like, this is basically people realizing that they were mispositioned for the ETF news, and I don't think we've necessarily priced in the ETF news itself. I could see that happening more so than before with this fake pump, because I think now people realize that it's actually quite a big deal. For some reason, I had a bunch of people, I saw a bunch of people that thought like the Bitcoin ETF was not going to be big and wasn't going to lead to price movement. They were proven wrong with this fake ETF thing. So I think there's a little bit of fuel there that could propel us higher. And if we do go quite a bit higher before we get the Bitcoin ETF announcement, like if we're trading at 40 or 50K before we get the announcement, I would sell the announcement pump. And I think that's like 30K is a little bit early for that. Like, that doesn't really make much sense. So for me, just from like a completely, like, ignoring all TA, it just makes sense to be bullish right now. And I will be bullish unless TA forbids me to. And I think that would be making new lows below 26 point something.
Yeah, it's like a proper swing trade invalidation. Yeah. Or if we use your Twitter chart, it's at 0, you get invalidated. So.
Oh yeah, but I updated that one, and the invalidation is 24, I think, on that one.
Yeah. You know, while we were recording the show, I literally left a Twitter comment on that chart saying, "Why didn't you update us?" And it's a quote from people who don't watch Casual Fridays. So
it's great.
Thought I had to come in swinging to defend the show. Some guerrilla marketing tactics, Don. Also, just completely off the cuff, to break the fourth wall again. This is again the bear tard in me, and this is going to age awfully. But at least this year and early next year, I'd be really fucking surprised, and it's not my base case, that we just reclaim monthly support in the 35, 38 and just fucking send it. And the kind of Q1, all the good stuff's happened. We've had the ETF, we've got the halving narrative, 1-2 punch. The ETF is doing a lot of marketing. The range reclaimed at 35, 38 just got blasted. We're trading high 30s, early 40s. The kind of the moon case that we put out in the Technical Roundup newsletter. I'm struggling to come to terms with that. Like, I know there's some great signals to suggest that it could be the case with all the narrative stuff, halving stuff. All of 2021 heroes are in jail, basically, or getting investigated. So it seems like a nice cleansing. But there's just something from a time cycle perspective that makes me doubt. And, if I had to put money on the thing, not in like a trading sense, but just in a casual sense, I'd be very surprised if that was the route that we took. Just fucking up only, fuck 30K, and that's it. We've done the hard part. I don't know, man. Am I dumb?
I actually don't know. Like back when we hit all-time high, right? Like at 68 or 69,000. I tweeted. I put out a tweet being like, so what are you guys gonna do the next 3 years, right? Because it's like, okay, we're gonna have this is peak stupidity. We're gonna have like a bear market, right? And I expected it back then to be 3 years, and that's actually coming to an end in, I think, like 6 months ish, which could play out quite nicely actually. Like just thinking about it, but I'd be happy if I got invalidated on that, as in like being like, we actually already moved up before that deadline runs out. But to me, honestly, I don't know. Like, it seems the narrative seemed to converge in a really nice way. And there's the possibility that if the market in general, like the global markets, don't do something shitty, that all of that plays out in our favor. So I honestly think there is a chance that in Q1 we're trading back at 50, 60K.
But don't think about all the people struggling in Germany you were talking about like a month ago. What happened to them? They're not buying. They're still struggling.
They're not struggling anymore.
Price went up, so they're fine.
The cool thing is, like, you basically just need a narrative, right? And the narrative for Bitcoin could turn from like, okay, it's just like something that you speculate on, to actually like, and I mean, gold's been doing quite well the last few weeks, to the whole like, okay, flight to safe, like whatever. My mind is jumbled.
Safe haven, flight to safety. Yeah,
flight to safety, all that kind of shit. So if that narrative shifts well enough, I doesn't need retail. I don't think we need retail necessarily to go towards 50, 60K. Now with altcoins, I will still make that argument,
right?
That people are struggling too much to get like something proper, unless we get like a massive Bitcoin pump, and then people are just hyped, and they try to escape poverty by buying shitcoins, which will inadvertently put them into deeper misery. But that's beyond the point.
So, deeper misery. Yeah, I guess this is the point, probably the central point of disagreement, right? Like for me, or at least in my view, when it comes to how high can we get while global macro stuff sucks plus retail is dead, I think like 30, the 30s, 32, 35, maybe up to 40 or whatever, is like a reasonable ceiling for that. Because a lot of the time that we spent above it, we had insane retail flows, we had zero rates, we had also pretty opaque and fraudulent credit markets with a ton of uncollateralized lending and borrow getting levered to the tits by both hedge funds and so-called delta neutral market makers. There were so many ingredients in that melting pot that we're missing now, that I guess the model in my head has a lower ceiling for how high can we reasonably get in this time span without all those things being present to some extent. It's like, if we're up more than 2x from the bottom and everyone's still dead and in jail, and I'm like, what more do you want, guys? So look, for everyone who says that Technical Roundup is just me dick riding you on Fridays and we never disagree on anything, there you go. That's your yearly disagreement quota.
Yeah, I think the one counter argument that you can make, because I do kind of largely agree with you. The one counter argument that you can make is basically, if we get an ETF, right, it's a lot of the missing legitimacy that we've had in crypto kind of out of the way. A lot of people kind of, and this is something that I've seen in real life as well. Whenever I talk with people, and they kind of get that I'm like the main thing in my life that I do is crypto, right? Crypto trading, whatever. They raise an eyebrow, right? But if you have like a full-blown media kind of storm about how like crypto is now regulated and whatever, whether you like this as a crypto native or not, beyond the point, like you give a lot of legitimacy to a market that has been sorely missing it. And I think that can take us further than you'd think. And also that fucking a stupid pet rock like gold can go up. It's almost at all-time high. So why not Bitcoin as well? But yeah, I do kind of like, and this is something that I go back and forth on, because I do kind of like, I'm also in your camp a little bit, where I'm like, it doesn't really make sense. Like the economy and everything is kind of like people are struggling, and where the fuck is the money gonna come from? But also like, there's quite a bit of even crypto native money that isn't deployed yet. And yeah, we'll see. Basically, we'll see how that plays out. I'm not dead set on, oh, this has to go to infinity or not. But I do like the current setup. I think the way it is shaping out, this could run. And I'm not gonna stand in the way of a Bitcoin run ever if I don't absolutely have to. And right now, like, it's shaping out nice, doesn't have to play out. If this setup fails, I think we're fucked. As in, if I lose money, the market goes to zero.
How convenient.
But we'll see, right? And I just wanna give it the chance, right? Like, the one thing that I hate most, and it has happened in my time trading crypto, is where I'm like too defensive or whatever, because I think, yeah, this and that is not going to allow this to run. And then it starts running and I'm like, fuck, and I have to chase it upwards. And there's nothing that I hate more than chasing it upwards. So I'm ready this time. But yeah, could be very wrong. And I don't really mind too much. Sometimes you have to kind of risk being wrong just to have the position that you need in order to kind of hit it big. And there's only so many times where that actually is possible, right? 16K, I think that was a time where a lot of money was kind of up for grabs. And I think if this breakout plays out, there's a chance that that also is one of those times. But who the fuck knows? Me, most certainly not. I just play the setups if I get them.
You're just going full Matt Damon, fortune favors the bold, or whatever the fuck he said. I guess that's the summary version. No, well, I guess the summary version of your argument is essentially, do you think we go up? Yes. Would breaking 30K be important? Yes. Why don't you just breakout trade 30K then? Because I hate breakout trading. Oh, okay. That's it. Yes. That's the dialectic, if you will.
Also, because breakout trading is much harder than you'd think.
No. Twitter makes it very easy, Don. You're just poorly informed. Your levels suck. That's what it is.
That's why all these people chill whatever the fuck pre-sales and whatever, and say trading is so easy, it's free money, but then also have like the shadiest shit going on. Is what it is. I don't know. It's just odd.
Well, I think it's also like a lot of people transfer trading styles from like different, like, if you're breakout trading on-chain stuff, that's pretty different to liquid breakout trading a lot of the time, right? Like, it's a different pool of participants. You don't really have the same size constraints. The execution on the big stuff tends to be a bit trickier and more sophisticated. Like, getting filled on a limit chase is harder. So there are all sorts of differences. But I guess, if I were to push back, I disagree with the premise that everyone who's a good breakout trader isn't actually, but they're just scamming or something. I just think there's probably
no, that's true.
Fuck you. I think there's stylistic divergence. There's a fancy term to soften the blow in trading styles. And for high time frame levels stuff, it's just not as commensurate with breakout trading as other, for example, trend-based styles or momentum-oriented approaches, So shout out to my breakout trader homies, pre-sales or not. Should we talk about ETH?
Yes. I mean, no, but yes.
No, but yes. Should we skip ETH USD? Because, I mean...
we can talk about ETH USD, but just like briefly, because it's very funny to me.
Right. What is making you laugh?
I mean, I had a bunch of .eths basically in my comments. Like, do you remember the whole futures ETF pump?
Yes, I do. That
absolutely
was
beautiful.
I mean, just like the Litecoin halving, Don, it's going to kick in at any moment.
Yeah, it's going to come eventually. Like, that was such a stupid narrative, and I got so frustrated arguing with people about it. We got a little bit of pump, and people were kind of like happy to make fun of me for missing out on the 3% that ETH BTC put in. But now you look at ETH USD, and that's actually been like in a steady downtrend. Which is in stark contrast to what Bitcoin's been putting in, right? Like if you put ETH USD on one side and Bitcoin USD on the other side, Bitcoin USD is like nicely uptrending and putting in like this kind of like somewhat of a walk upwards towards resistance. ETH is doing the exact opposite, right? It's walking into support. Now, I don't want to shit talk ETH USD too much, because if I'm bullish Bitcoin, there's a good chance that ETH USD gets bailed out. But I mean, that's a horrendous look for something that is in the same asset class as Bitcoin that just basically went up. Like, what is it from the bottom to the top? It's like 20%. 18, 19%. ETH doesn't even look like anything happened. So ETH USD, quite tragic. I think it looks quite shit below 1.675677. That kind of like, that's the level that I'm looking at. 20th of February 23. Below that, it just kind of looks shitty. There's not really that much more to say. There's only one support, and that's 1K for me. But obviously, like if I'm bullish Bitcoin, I'm not expecting ETH to go to 1K. That seems unrealistic.
I don't know. You were tweeting it, Don.
No, I was tweeting 2K.
Oh, fine, yeah. That was BTC at like what 40 or something in that tweet. That would be. I mean, ETH BTC would be decimated. Speaking of which, it's not doing a terrible job at that. This is getting pretty scary, I think, on a relative pair, because even the cope levels of weekly support are getting smoked at the moment. So the weekly closed above 057 barely, but this week's just unsurprisingly, with everything that's happened, been acceleration. I don't really have 053 where it is right now, the kind of lowest close in the range, as a particularly good support. I might do something bounce-wise as an inflection point, but this portion of the trend, I think it's fairly firmly accelerating now. Stepping in front of that is pretty scary. And then if you look over to the left, there's basically a 2-3 week volume gap of sorts, right? Until the market reaches more reasonable levels closer to 04 and change. 043, maybe even 04 round number as the kind of breakdown target. But in any case, if you just look at the construction of this thing ever from the 29th of August of 22, you essentially have a downtrend that's been intact for over a year and a downtrend that's now accelerating. So if you were buying it during the downtrend or during the drift, that's a bad idea. And buying the early part of the acceleration is generally a bad idea, at least not as bad as buying the drift lower, right? So I think it's getting to a point where it's becoming interesting, even if from a price point of view, it could be far away from the bottom. I think from a time point of view, given how long this downtrend has been, at least that's contextually getting somewhere, because the acceleration portion tends to happen later rather than earlier when it comes to how long these trends last. So that's good. But I also don't want to like bull tard this thing too early. If you look at the macro range from like the early 2021, sort of May, June, when we first set that low after the mega pump, if this is a breakdown of a 2-year range, stepping in front of it early could be the most terrifying thing ever. I think there might be an interesting counter-cyclical play where, ETF approved, all the good BTC stuff, and it's pure BTC season, and this pair just gets absolutely decimated. If you want to be a bit cheeky and a bit counter-trend, I think that might be a decent time to start scaling into some ETH BTC stuff. And then the argument would essentially be that the BTC move, quote-unquote, confirmed the bull market. And if your base case is that ETH is likely to, at some point, outperform BTC in the bull market, or that ETH is, or I guess a sort of complementary argument to that ETH got oversold just because of how Bitcoin centric the narrative was. But now that risk is going to spread out a little bit and we're going to get inflows and all the good stuff that comes with better prices, ETH is going to sort of mean revert harder. I think both of those work quite well. But they both also assume at least another leg up in BTC, which probably means another leg down in ETH BTC. Do you think that's nonsense?
No, I 100% agree. I think in general, like we've been, if you just put off the bull goggles that everyone has on in regards to ETH, right? Like, because everyone's like, oh yeah, ETH's gonna outperform. And I mean, I do kind of like, I'm in that camp as well, right? Like, oh, in the bull market, ETH's gonna outperform. In general, ETH does well when the market turns back to its former glory, whatever, blah, blah, blah. If you just look at it from a TA perspective, what ETH just did against Bitcoin is it went through a distribution range, right? It's been distributing for basically 2 years, and it's breaking the lows. And unless it kind of majestically reclaims all of that, technically, from like a high time frame perspective, this is the most bearish chart that you could have, right? Like it's literally a range breakdown of a 2-year range, and that generally doesn't bode too well for like an asset, right? Like I mean, it just looks like this is basically, I mean, this was the top. We're now kind of starting to accelerate. Then you're gonna nuke eventually, go sideways, and then you can start talking about an uptrend, right? If this wasn't ETH, this is what we would all be saying, right? As in, like, it's been bearish, it's not been doing so well. Bearish range played out. Now we need to nuke, put in a new range, and then we can resume the uptrend. Now it's ETH, so we're all a little bit like in the bull camp. But I still think that's kind of important to keep in mind that technically speaking, this is just like a very, very solid downtrend after a range, and it looks quite bad. For me, I want to see this accelerate, and my go-to case is basically that this is not a distributive range. It's just a range that we will nuke out of because people are just too bullishly positioned, that we will then reclaim so we can go higher, right? Like that's my base case. But to kind of go to action and kind of actually act upon that case, like that base case that I have, I would need to see this dump considerably more, like on the ratio, like 10, 20, 30, 40% ish more. And then I could start thinking about buying dip, or for this to just turn around. And something that I've been seeing, right? And I have very much not been on Twitter, but like every time I open Twitter, it's basically what I see. People are mentioning the ETH-BTC ratio every time there's a green 4-hourly candle for the last 2 weeks. And if you look on the 4-hour on ETH-BTC, I mean, there's not that many green candles that you can actually even talk about. So it's actually like, I think people are still like very, very bullishly inclined. They're like fishing for the bottom, even though this looks horrendously bad. It's actually one of the worst looking charts, I think, in crypto
that
right
4-hour is actually really bad. That looks like
Yeah.
one of those Beyond Meat legacy scams or a Chamath IPO.
Yeah, and that's before the whole ETF thing even has played out, right? Because I really think the moment you get the Bitcoin ETF news, if that is ever gonna be a thing, you're gonna get like a Bitcoin 10% up candle and an altcoin 10% down candle across the board, right? So if you're expecting that to happen, and maybe afterwards, like I could see it afterwards reverse again, but I think the initial kind of reaction of people would be to dump altcoins and to buy Bitcoin. So like that's before all of that happens. This is just basically based on the rumors. So yeah, it's tough, and I don't really see the point of buying this. And people have been begging me to like, oh, talk about when to buy ETH, blah blah blah. There's really no good level, in my opinion. We broke the only level that we had. We bled into it, and that was 0.057. And bleeding into a level like the main level on the chart is just something I fucking hate. Like you bleed into a level like that, there's a good chance you break it, and you're gonna break it fast. So for me, we can talk about ETH BTC being interesting again if we reclaim that level with a little bit of force and then close quite a bit above it. Then I'm down. If we nuke massively, I'm down to talk about it when no one asks me about it anymore. When people are just like, yeah, fuck ETH. I'm down to talk about it at that point. But right now, it seems like everyone is watching ETH with like a happy trigger finger, and people are buying every 4-hour candle that they can see that is not red, and they're getting rolled over and rolled over in an environment that is very, very geared towards just Bitcoin doing well in comparison to everything else. So I just don't see the point.
It's been fun bear tarding this thing though.
Yeah.
I do agree that there's you know how there's like American exceptionalism? It feels like there's ETH exceptionalism in the crypto space, where we all approach it with rose-tinted bull glasses more often than not, and for good reason. But when you've got a 2-year distributive range and a 1-year downtrend staring you in the face, it's a bit harder to make those arguments. Also, if you're a bull on a large enough time frame, you should kind of welcome this repricing, right? Your view should be that, oh my god, all of these idiots are buying pet rock institutional narrative, and the real amazing tech is getting heavily oversold on a relative basis as a result. So for me, cyclically, who believes in the flippening, for example, and for me, I mean, in this example of the person making the argument, well, I believe in the flippening. So, the further they sell down ETH because of this medium time frame, but still single narrative of an ETF, the better cyclical entry that is for me, right? So you should almost be, in a weird copy way, if you really believe in your thesis, you should be welcoming that argument and this repricing with open arms. Because if you're right, this is like generational type of thing, right?
Yes.
Where this is so Bitcoin centric and the market is so starved of liquidity that this thing can't even pretend to keep up, let alone be, I'm sure there's a generation of crypto traders in the newer cohort who just assume that, who don't have the built-in reflex to assume that ETH is BTC beta, right? Sort of, oh, BTC goes up, ETH goes down, ETH goes up more. Okay, I said goes down. That's a Freudian slip right there. But basically, that used to be the go-to relationship, right? Like if you're bullish BTC, you just buy ETH instead because it would kind of go up more, type of thing. Certainly when the market was bullish. Whereas now, BTC goes up, ETH goes down, BTC goes down, ETH goes down more. It's like, holy shit, on a relative pairing. So that could turn into a very interesting trade. I am in the sort of, in a bull market, ETH is likely to outperform camp. I do think there's a decent chance that EPTC gets higher time frame oversold, whatever that means, just because of the narrative concentration and low liquidity state of crypto. But those aren't reasons to fade this really strong trend. They're just reasons to be optimistic for when it reaches good levels or when it reclaims. So
yeah,
cool. That's ETH BTC. Do you have any final comments before we jump into some alts?
No, I don't.
Cool. Also, just as a final note, dude, these really long bleeding trends really sneak up on you, right? So it just kind of keeps making lower highs and lower lows. You're like, oh yeah, that's good old EPTC, still not doing anything. And then from high to low, this thing's down like 37%, almost 40% on a relative pair, which is a lot. So that's also a reason why these kind of slow bleeds or really technical downtrends get kind of scary, is because you kind of embed them in your mind, like, yep, this is a thing, and you look at it structurally, but the percentage decrease or increase really catches up to you once you actually zoom out and measure the damn thing. On the altcoin front, I've got 4, Don. We'll start with the strongest one, which is actually Solana. And this is one that...
Big surprise.
yeah, big surprise. We kind of like talking about Sol because it behaves differently, and this week it really picked up. They did attack Jeebus and kind of bully him off Twitter or really mean to him, so that's not nice. Jeebus is a staple in the space, and his experiences sort of helped me, that's for sure, when it comes to cyclical comments and NFT stuff.
He blocked me, but
oh well, rip. But he's a nice dude. I like having him around. It sucks that it's just not a great sign for the long term when you have a community that is so rabid with people who disagree with them,
hate it.
Especially with altcoins, right? Like that's just like not like, for a bull market it works super well because cults are bullish. But from a from a single cycle point of view, that's really bullish. From a multi-cycle point of view, that's really bearish. So have fun reconciling those. But nonetheless, from a TA point of view, Sol is, it's been massively outperforming everything. I looked on Velo earlier. It's just kind of in a world of its own. And what do you think? Where is the breakout level for this thing? Because I know you had quite a conservative weekly chart, which I think had like 29 to 33 as that pre-breakdown weekly cluster, if I'm not mistaken. And we're sort of getting there. I had a more like a closer buy level, which is the weekly highest close at 26 or thereabouts, and that's roughly where the monthly level falls as well. 24, 26, whatever. If we're talking breakouts that have been brewing, this is one of them. Do you have any interest? Do you still think this thing will eat shit if BTC goes up? Because basically, a few of these strong altcoins, and Link is one of them as well, and I mean TRX somewhat, but that's shady as fuck. A few of these look really kind of good and on the cusp of breaking out, which is very scary from a trading point of view, because sometimes when it just looks like it's about to break out, can be the top. But second of all, it's hard to reconcile these multi-month altcoin breakouts being bullish if your base case is that the next BTC leg or the ETF driven BTC leg will mean altcoins get liquidity vacuumed and dip/vastly underperform. So where do you stand on all that?
I mean, what I think, like the strongest altcoins basically will nuke. Like if Bitcoin actually has like a really good candle on the ETF kind of front, right? I think everything is gonna nuke, but the strong altcoins that were strong before that happens are just gonna eat that up, even on the relative pair. Like just basically like 4 hours after, they're gonna be back, and then the USD pair is gonna be up massively, right? So like that's why I like to still look at the market, kind of figure out what's the strongest ones, because if you get a massive pump or dump on Bitcoin, those are the ones that you can buy the dip with. So I find them interesting. Solana is one of them, right? Like for me, Solana and Bitcoin Cash are the two main ones that I'm looking at. There's a few more, but those are the ones that I like best. And I'm not too like, I just look at the Solana chart, right, in comparison to everything else. We just look at the ETH BTC chart. If you look at the Solana Bitcoin chart, that's a completely different story, right? That's a good looking chart. That's a chart that's pushing into resistance over and over and over again, in comparison to the ETH BTC chart that is breaking ranges to the downside, right? So I like Solana. I think there's a chance that it even outperforms if Bitcoin goes up. Like there's always going to be outperformers. Solana could be one of them. I don't have a position personally. I was very, very much considering one on last week, basically, because if you go on the Solana USD chart on the weekly time frame, I had a support level basically at 21.7, 21.8.
Oh, got that before you finished it.
Yeah, and I was like, we had this false breakdown. We reclaimed it with a pretty good candle. Now we're retesting it. I like it. And I was thinking that might be the last time where you get to buy before you actually get a like higher time frame breakout, right? So that's why I liked it. I didn't pull the trigger on that. I just bought more Bitcoin instead. Cope is what it is, because my whole argument is basically that Bitcoin strength, right? So I was like, I might as well just stick with that. Now in hindsight, obviously should have bought a little bit of Sol too, but is what it is. But I like it. I like the chart. I think if you break $30, this easily can go to 50, 60, maybe even higher. And it's one of the better looking charts on both the USD and the Bitcoin pair. So if the market stays bullish, I mean, that's one to look at on the altcoin front. And nothing that I've seen comes even close to how good Solana looks, in my opinion, on the altcoin front.
Yeah, I mean, it's certainly in the past week and even today, it's been the strongest one out of the high caps. So there was a lot of writing off of Solana, right, with given the entanglement with FTX, but I think the price action just until proven otherwise is telling a different story. The other alts that I've got is, well, Link is one of them, and I'm just wondering if this thing is ever going to break out of its eternal range. I still, if the market is bullish and you get this whole rotation of 30k BTC breakout, alts first eat shit, and then kind of catch up and do well, there are a few of these charts that just look really high, like on the cusp of a high time frame breakout. So Sol is one of them. Link has been weaker, but I think that argument applies, although to a lesser extent, but still applies. That this thing's been brewing for over a year, just going sideways. So if that breaks and the market is bullish, it's kind of worth giving a chance. Even though the price action itself looks fairly anemic, anemic is pretty strong in altcoin terms compared to
Yes.
most of the high caps that have just been bleeding down to their yearly lows and not doing anything else. So that's on the watch list. Have you seen TRX?
Yeah, but fuck that.
So, as a fan of coins that walk up, Don, I mean, this on the weekly time frame from the
yes,
stone cold bottom has just been doing that. This is a baby pip subtrend, isn't it?
it is. I mean, even if you go all the way to the monthly time frame against Bitcoin, it's a really funny chart. Because it basically did an inverse head and shoulders, had a breakout, and retested the neckline, and has been walking up ever since. But you will not convince me to buy this ever. But
Just give Justin Sun your money, Don.
No,
come on,
no.
He needs it.
I will not buy anything that Justin Sun has touched. Which, I mean, at the end of the day, is pretty much everything in crypto.
That's
sadly
true.
enough.
That's true.
But,
Certainly, DeFi 1.0 is out of the question.
Yes, but I don't think I trust anyone less in this space. And there's a lot of shady people. I don't trust anyone less than Justin Sun. So I'm just not.
And to be clear, you're not saying he's shady, because that would be an unwelcome defamatory comment.
No,
this is just your tea leaf gut
Yeah.
instinct based on nothing, and it's all a joke because this show isn't real, right?
Yes, it's all imaginatory anyway.
Correct. I wish imaginatory were a word. It might be, but it's not. It's not top of my list. XRP has. I mean, this thing keeps making headlines because of SEC related stuff, and there's a lot of open interest changes. So, coins swapping hands, or at least the perp contract swapping hands, technically. Do you think this is interesting at all? The weekly is retesting this. The reason I brought it up is because that mantra of yours where it keeps testing the same level came to mind. And I was looking at 53 cents on the weekly time frame, which I know isn't the level you've necessarily got, but that's just anchored from the 3rd of October 22 weekly range high. So that was the high. We had a lot of spikes in March. We had a lot of spikes in May. We had the lawsuit overshoot pump and dump, and now we're back there again for arguably the 4th time. So that's interesting. At least there's some narrative-ish, although I was quite surprised by how, in relative terms, uninspired the response to it was. I'm sure there's some technical reasons for that. It's not like the SEC is abandoning the case. They just want to get in front of an appeals court sooner rather than later. But does this qualify at all, or are you just sol BCH Maxi on the altcoin?
I just think the narrative has played out, basically. Fair. We had the whole SEC thing, we had the pump, we had all of that. That pump underperformed. It was obviously nice, right? It was a 2x, but it still underperformed expectations. I think people are basically over it. I think it's the same. A lot of these old coins are just useless now, and I think XRP is now one of them. I mean, look at Dogecoin, for example. And that's one of the more interesting old coins, right? And Dogecoin on the Bitcoin pair, that's a look. That's actually just wild how bad that looks. And I think the old coins, if they don't have a pressing narrative that is new and fancy and interesting, they're gonna bleed out. And there's a lot of kind of examples for this. I mean, even barely anyone remembers EOS, and EOS was the biggest coin for the longest time in 2018. I think that's basically how it's gonna go now. The old narratives are dead. The only reason why I like Bitcoin Cash is because it's basically piggybacks off the Bitcoin name. And is basically included in all, every time, the TradFi markets basically add something. They do Bitcoin, ETH, Bitcoin Cash, and Litecoin to an extent.
They like the fundamentals, Don. The halving, the burn.
They're 15 years behind. But that's why I think we have something, you have a Bitcoin narrative, and you have something that's called Bitcoin Cash, and it's one of the ones that is gaining legitimacy due to just being named amongst Bitcoin and ETH. I think that's an interesting one.
Even though it shouldn't, right? Just to be clear,
it shouldn't.
It's garbage.
It's garbage. But I mean, this is the only reason why why I could ever see myself buy Litecoin again as well. It's only because the boomers are so bad at this that they're giving legitimacy to coins that are basically dead already. And these coins are quite cheap in comparison to a lot of the other things. I mean, Bitcoin Cash is way down the list of coin market cap. I actually don't even know how far, but it's very far down. It's place 13. Litecoin is 11, right? And I think that is, that's just coins. That's not.
I mean, you'll trade
all
the
of it.
next Litecoin halving, right? That's always a reliable punt.
Yeah, I might actually. Yeah, when you look at all cryptocurrencies, it's 15 and 16, right?
Right.
And the difference between like the market cap of Litecoin is like 5 billion, and to go towards like the next one that is named like ETH is almost 200. So like there's a big, like they're basically just grouping in shitcoins with Bitcoin and ETH, which makes them somewhat of an interesting bet. But I'm not gonna buy Litecoin. If anything, Bitcoin Cash, like I said, has the name thing on top of it. Also has the funny meme that Sailor doesn't own any of it. So it'd be really fucking funny if Bitcoin Cash actually flipped Bitcoin.
Oh Jesus, don't.
But that is not gonna happen. But it'd be fucking funny. I would love it, but obviously not gonna happen.
Listen,
Anyway,
Sailor's responsible for a large amount of your success, directly or not. It's going to be a great day when he sort of breaks even and maybe goes into green on his BTC position.
Is he not already? I think we're pretty much exactly.
Oh, he might be actually. Yeah.
I think he's.
Oh god, it's the
right
top
now.
Don. It's over. Sailor's
been
break even.
Resistance. Yeah, it's been resistance for the longest time. Like his entry, like his average entry has been resistance. Like that's what we've been struggling to get through, which is quite funny to think about.
Well, I mean, he'll ruin it almost immediately, right? Like he'll buy the top of the breakout and then be underwater again. But I mean, he can't lose. This is the thing about Sailor. If BTC goes to 1 trillion or whatever, it becomes digital gold safe haven. He's nailed it. And if it doesn't, he's personally just very rich and he'll be fine. So
yeah, I mean, he'll be fine, but I think he'll see it as a ginormous loss. I think he's as a person in kind of his shoes, you have to be a little bit narcissistic, and I don't think he's just a little bit.
I mean, he's an ideologue as well, right? He's put everything into these digital cyber hornet things. So yeah, but I'm just saying he could stomach the loss. Let's put it that way.
Oh, yes, I mean, he's not gonna go hungry.
No, he won't. There'll be enough Bitcoin maxis feeding him steak. He'll be fine. That's really it for the altcoins. Now to bring up an sort of irrelevant market, the S&P 500, Don. What correlation, I hear you say. And
it's beautiful, yeah.
we keep going back and forth on this, but has this, if we were speaking to Cred and Don of weeks past, the argument would be that, hey, 2-3 days isn't enough for a decoupling, and if this thing really shits and it doesn't look good at the moment, then it would affect crypto. Have you abandoned the old gods of bearish macro correlation, or do you even care about this chart anymore now that you're green?
No, I do still care about it. If this completely shits the bed, I think it's gonna be bad. But the good thing is, right, my whole thesis has been that we're gonna be bearishly ranging on the S&P between 4.3 and 3.7. And that can take a while, right? Like we could still be spending 3 months here at the range high before slowly moving lower, as long as the flows stay positive on crypto or on Bitcoin specifically. It's still okay, but in my book. So and so far, like in the last few days, Bitcoin's been up and S&P's not been doing so well. So maybe we do finally, like back in the day, during better days, right? We would just basically pick whatever was doing better, like whether it would be the S&P or gold. Now gold's been doing really well and Bitcoin's been doing well. So maybe we're going back to the good old days where we can pick whichever we want to correlate to, and I'm down for that. So maybe gold keeps going up and Bitcoin goes up with it. I'd like that.
Oh, BTC's at 30k and Don's just making up narratives at this point. Pick me up, mum, I'm scared. It's like that old meme. That makes sense. Yeah, it's obviously a very charitable view, right? They're like, yeah, the S&P looks like shit, but as long as it doesn't look like shit all at once too quickly, it's fine. And hey, maybe it doesn't even matter at all because we'll just start tracking gold like we did in the bull market for like 2 weeks.
I know. We could also just be wrong, right? Because the S&P's just been going up for quite a while, so maybe the S&P just keeps going up. Like that's obviously always possible. It's not like that would be kind of a crazy thing for the S&P.
It does look a bit shit at the moment, though.
It does, but
yeah.
it also
Four.
like if you look at the monthly time frame, right, it also just infinitely goes up. So it's like it's really hard to be bearish this thing. Now I am like somewhat bearish on it. And I think it will impact us in some form or another. But I also think if we get a Bitcoin ETF, that won't matter, at least for a little bit.
Yeah,
We
yeah.
might, like, at that point, it doesn't really matter.
Yeah,
too
we've
much,
discussed
but-
that dynamic before, right? Like if you have enough sort of correlation insensitive takers in the market, and if you have enough like liquidation flows and just aggressive flows in general, that can mitigate the effect of sort of spillover from legacy markets. So if you have like just enough people market buying or market closing their shorts in one way or another, then the correlation breaks and the sort of crypto native flows become more important. So let's just hope there's enough juice left there. Do you think this will be one of those episodes, Don, where it's like the market's at 30K, and then apart from the hey, if there's a failed breakout, that'll be really bad. But is this sort of a bull post episode at the top? Do you have that feeling at all? Where you're like, yeah, it was underwater, but now it's pumped and everything feels fucking good. We're gonna break 30K. Do you ever like pause and think, okay, shit, this thing is at like 30K. Should I be worried? Should I de-risk? Like, what's the demon on your shoulder saying? And by demon, I mean capo.
The cap on my shoulder. I like that. No, I think before I started this trade, right, and this is something we talked about on this show too. I was like 28K is the line in the sand for me, and the only reasonable place to short. And then we basically nuked from 28K. So, like, in my opinion, that should have held. And the demon on my shoulder is quiet because, in my opinion, it should have been the point where it should have nuked. The fact that it didn't is quite bullish to me. So as long as we're trading above at least that level, at least above 28K, there's no fear in me. Now, obviously, I would dislike being overly bullish at the top, right? It's always an unpleasant feeling, and no one, like, the audience is never gonna let you forget. Even if your entry is if your entry is 16K and you're overly bullish at 30 and it goes to 25, people are gonna shit talk you, right? It's just how it goes. So I'd rather avoid that. But it's I'm okay till 28K is lost.
Yeah, that's fair. Also, as you know, when we plan these shows, we sit down 1 hour in advance and say, how do we hedge every single scenario and come out as balanced as possible so that Technical Roundup can be right no matter what? So what you're seeing now is a carefully crafted, not on the fly, very much like engineered presentation between two scammers. So.
Oh yeah, of course. I mean,
the way these calls actually work, by the way, for the audience, is that I will just send the Google Meets link to Don 2 minutes before we start recording. He'll come on, we'll do an audio check. He doesn't even know what the news articles are, and we'll just talk. So yes. that was completely sarcastic / ironic, the earlier portion, for those unaware.
I think I'm the most unprepared person to ever talk on any show ever. But
I just say no nowadays. Like, this is the only thing I do. I get like a reasonable amount, especially from friends and stuff, asking for like podcasty things, and I just never feel particularly comfortable accepting them. I feel like I've got nothing particularly interesting to say. I feel much better asking the questions than answering them. If I'm going to say stuff, I feel better doing it in writing over something like specific rather than some broad brush ranging influencer interview. Tell me all your thoughts. I don't know how the fuck you do casual Fridays, to be honest. I think you might be the real narcissist on, show up here for a grilling every hour and a half, every candle, every level, and then speak freely about it. So kudos to you, I guess.
No, I mean, it's a good way to kind of double check my thoughts, because sometimes I actually go back and I'm like, actually, this argument is quite dumb. Let me see if I'm just wrong. And it happens all the time that I'm wrong. But
you're just going to sell after this show.
No, this time I don't have such a feeling. But sometimes I'm like, oh, yeah, I can actually not properly voice my opinion. So maybe my opinion is just not valid. I think it's generally when you have like a good reason for something, you should be able to somewhat explain it.
Sure.
And if you cannot, maybe it's just not as good of a reason as you thought it was, and that helps me a little bit. But
You're welcome.
in general, like, I'm pretty stubborn and pretty just like whatever. I just say whatever comes to mind.
Yeah, well, it's working, you know. Thank you to those who listen to Casual Friday and leave comments. We all appreciate you. Don certainly does. He appreciates you so much. He's just left Twitter, doesn't read the YouTube comments, and is gating his content via Friendtech. So, you know, hey ho.
No, on Friendtech, there's not that much extra content.
I don't doubt it for a second.
There's just no content from CryptoDonAlt. But I mean, I did shit post a couple times.
We've got you for another like 6 or 12 months or something, man. If this show's still going on after that, I've probably just AI cloned you. You know what? I could do a decent. I feel at this point I've asked you so many questions with enough like voice technology AI stuff. I'm pretty sure I could run Casual Friday alone, and no one would be, and people would be none the wiser.
Oh, I would love to see that. Actually,
we should try it at some point.
Yeah, I think people. I mean, you've been basically drawing the levels that I talk about while I'm talking about them without having set the price levels at all. So I think it's kind of like you actually would be able to. But yeah, we'll see. I mean, for me, I just plan around. I plan to stick around for as long as it's fun, and it stopped being fun like 2 or 3 weeks ago.
Good sign.
So we'll see how long I'll stick around, or whether Twitter and like the whole social media thing stays fun for me or not.
By the way, this isn't sympathy bait. Like some people might think, oh, he just wants people to comment, please stay, we love you. It's like, no. Don is genuinely very apathetic and ambivalent towards this type of stuff. He could just disappear and not be influenced. Whereas if I had to leave the crypto social media space, that would be a life-ending disaster. So I think that's a real indictment on my character, more so than it is on yours.
No, I've always been good at this. Like I'm like this is not fun anymore. Bye, and then I'm just gone, never to be seen again.
Have you told your wife that as well? Does that carry over?
No, not yet.
Not yet. Like just one day. Sorry, I'm bored. I'm leaving now.
Oh, you can't really do that when you have a child.
I mean, some people do.
Oh yeah, but that's a little bit scummy. And with a little bit, I mean a lot. And I would never want to, because she's the sunshine of my life. So
not me.
In second place, of course.
Second place, okay, fine. And then your daughter's third, fine. I'll take that ranking. Let's do some news before we completely derail. And if this is the Pico top, I think I've done enough bear tarding on behalf of the bears and probing the bullish questions.
No, it's the Pico bottom, brother.
The Pico bottom? Okay, sweet. I mean, the 1 minute has started going up since we went off topic, so there's to that. News-wise, and I'm going to open it up as primitively as I can. I've got 5 articles here. We've sort of covered a few of them in passing. The first is the Ripple one. Dismiss charges, calling it a surrender by the SEC. I'm not sure this is completely legally correct. I still think there's going to be some enforcement action about the provision they were found guilty of violating, like the institutional sales of XRP. And I think there might be some other appeal as far as the other points, but I'm not entirely sure. I think more telling here than the legal jargon is, I think you're right. You know, I was quite split on this initially, but I quite like your argument that the market's just kind of tired. It has XRP, SEC fatigue at this point. And like, you already got a 2x out of that narrative the first time round. And every subsequent pump, kind of like the Elon Dogecoin thing, is probably going to be less efficient, you know? Yeah. That's kind of as good as it gets. And from that point onwards, might be a bit tougher. But you know, there's still some interesting levels there, and volume-wise, it's still trading. So it's nice to see some of the old coins at least not be at yearly lows, you know. So that's something. I don't think there's anything else to add on the XRP one. This one was interesting though. Pair of Reddit mods, me and you obviously, appear to have sold off tokens ahead of announcement to terminate their blockchain-based program. I mean, all sorts of weird stuff has been happening at Reddit. They got rid of their points, like the gold and a lot of the platform stuff there.
They basically rug pulled their fucking thing.
Yeah, they just completely rug pulled that. Their token. And then on-chain analysts noted that apparent insiders connected to Reddit's cryptocurrency subreddit seemed to have sold off significant quantities of course it was called Moons, the forum's own cryptocurrency, before Reddit publicly announced plans to discontinue its community points program.
I mean, they gotta eat, bro.
They gotta eat, yeah. The Reddit mods,
they don't get paid.
I think that's all Reddit mods do is eat, isn't it?
True.
But yeah, just down 85%, and yeah, some changes going on there. Didn't they have some Reddit avatars as well that were like kind of like NFTs?
Yeah, they had NFTs actually.
They
Like
have
just
they have
straight up
such a
NFTs.
pump and Reddit has such a pump and dump relationship with crypto. I swear
Oh,
to
yeah.
God, like the cryptocurrency subreddit is garbage. I think, or
Oh,
the
yeah, yeah.
overwhelming
It's the
majority of it
worst.
is just pure shit, and it constantly gets botted as well, and weird giveaway token shit that I've seen there when it used to come up on the home screen. And now they've rugged their NFTs, they've rugged their blockchain, and you have Reddit mods insider trading for $23,000 and $92,000. So that's really how you make money from Reddit, Don. You embed yourself into the community over the space of like 10 years, and then you insider trade a delisting.
I mean, I think that's the most money they made anywhere.
Probably ever, yeah.
Like, I mean, like the whole like the Reddit mod is kind of like the dog walker of the neighborhood is actually like just kind of true. I think like a lot of the Reddit mods, if you look, they're mods for like 15 to 20 subreddits, and I mean, just take it way too fucking serious, and don't have anything in their life that is actually important.
It's like a pejorative term, like yo, bro, you look like a Reddit mod. You know, he's not.
Yes.
That's not a compliment.
No, and it's like it's actually like just true stereotypes for the most part, right? Now, obviously, there's like smaller subreddits that are really cool. Something I like about Reddit, just completely off topic, is like when you go, you have like a weird hobby, right? Like for example, like some people, and I mean a lot of people like to make coffee. For example, you go on Reddit and you just look for the coffee subreddit, and you just go through whatever the fuck they like as a beginner, what they wrote about, and you're going to be somewhat decently informed about it. It's the same if you go like for other hobbies, like I don't know, like diving or whatever. They have like decent resources, but then if you go to the bigger subreddit, it's just all complete and utter dog shit, right? And I'm not surprised that the mods of cryptocurrency subreddits would dump their tokens. They seem like not the smartest bunch anyway. So
I mean, the only thing I've ever used Reddit for was Cyberpunk 2077 and porn, and not at the same time. So I can't comment as to how well they cater to niche interests. Although some of the porn searches could arguably be classified under niche interests, but all of that is beyond the scope of the discussion. Just yeah, you know, this reminds me of a lot of like when Web 2 brands tried to go all in the whole metaverse NFT thing, and then just pretended it never happened after it all started going to zero. It's just weird to see Reddit go down the same avenue, essentially. And cyclically, it's so predictable seeing this shit happen, right? Like at the pico top of crypto, you have some trend chasing OG, not even OG, just like Web 2 businesses trying to catch a piece of the pie. Like, you know, Coca-Cola responding to, you know, all this wag me shit. And then by definition, because it takes ages for them to get anything approved and budgeting and infrastructure, even if they wanted to do it 6 months earlier, it takes ages to get it going. And so by the time they end up launching, it's the pico top and there's no demand for this type of stuff. You might be right about Reddit, but one time that I did find it particularly miserable wasn't during one of the porn searches, but it was when I would just doom scroll it before bed as a habit. And that's when the whole GME AMC meme coin thing was just going insane. So Reddit's entire sort of front page, if you will, was just idiots talking about stocks and moon and hedge funds and dark pools and a million other things I didn't fucking understand. And that was a really rough time for my evening doom scroll.
Oh, I mean that was something else. The whole GME saga was something else. It's trading new lows as we speak. Yeah, it's trading at $13.
It's the hedge funds suppressing it.
Yeah, I can tell. Just look at the price action. The price action is actually really interesting. Like it's just been bleeding. My favorite kind of thing. I just like for some reason, and I mean, all power to you if you made some money with GME. But for some reason, I just want this to go back to where it was. It's the world seems wrong where it was trading and how it's been trading before, and it's getting back to its rightful state while this is dumping to me anyway. The lower this goes, the more bullish on humanity I get. So that's kind of my
enjoy the death threats, Don, because we know that's a very involved community. Let's put it that way.
I mean, at the end of the day, like you do you, right? But if you like that, they tried to pump a company that's basically on its last legs, right? Like something that is basically arguably shouldn't be around anymore, in my opinion. And that just seems wrong. Like all these GME people, they were upset at the evil banksters and the evil like hedge fund managers, whatever. But kind of what they did is also not really the way to go about it, especially if you get a bunch of like smaller investors to like trick them basically into believing in your cause. And I'm sure like a lot of them just dumped a bunch and basically got normal people wrecked by spouting nonsense that they don't understand anything about, right? So that's why I have a personal problem with it, where I'm like, if you just did what you did, right, like the initial pump, and shut up about it, I mean, all power to you, that's badass, right? But if you then chill it to everyone on Reddit or elsewhere as like this thing that is going to go to a million and it's going to change your life, that's where I start getting problems with it, and that's kind of where it starts reminding me of altcoins, but even worse, right? Like, because people are like, oh, this is an actual stock, you cannot lose that much money. Well, this thing can go down 99%, and that's a lot of money lost for a lot of people. So, not biggest fan of this whole saga. I think it's pretty disgusting. Turned out like started nice, turned out really disgusting in my eyes. But yeah.
When you're in a moral grandstanding and gatekeeping competition and your opponent is DonAlt and it's that Squidward meme of the guy being super fucking terrified, that's what I feel like when you talk about altcoins and stocks and God forbid someone tries to trade. It's like,
I mean, they can trade, right? Like, I don't have any problem with the people that trade. I have a problem with the people that post on Reddit about how this is going to change your life. And
I mean, hey, if you lose all of your money, that'll change your life, especially if you're overinvested. So they're not wrong. It's just got the, inverse the chart, bruh. So there's your legacy market commentary. Here's a bit that you'll enjoy. Actually, no, this is the bull post one, so we'll keep it at the end, to be optimistic. NYAG files complaint against Gemini, Genesis, DCG, Michael Morrow, and Barry Silbert over earn product, covering up $1 billion hole. So again, this is the same AG that sued Tether, I believe, right? And yeah, it's just, I mean, the whole Genesis Gemini earn debacle is awful. And Genesis being basically a subsidiary of Digital Currency Group, all of this is kind of Barry Silbert's empire. And, the lawsuit claims that they disguised a $1.1 billion loss through a months-long campaign of misstatements, omissions, and concealment, understating the risk. They had huge uncollateralized loans, a lot of them with Alameda and paid in FTT, which is, whatever. The crypto industry just has this obsession with accepting junk collateral. And GBTC was an example of that. And it just seems like, I mean, Genesis used to be the blue chip of blue chips when it came to lending in OTC desks and, like a bastion of crypto credit markets. And that was clearly not true. The bit that's particularly unacceptable is that during the course of the Three Arrows blow up, and this is even pre-FTX blow up, that Genesis was saying they were fine and they just absorbed, they absorbed that well. And even when the FTX blow up happened, they said, oh yeah, some people are affected, but that it's fine, basically. No big deal. With just a few losses, but we're continuing as normal. Meanwhile, they'd been fucked for weeks and months before that. And, if you're a Gemini customer, I feel like that's a particularly shitty one because that's one of the exchanges that cares a fair bit about like regulatory compliance, right? So if you're assessing, especially being a US-based company, so if you were like assessing crypto counterparty risk, not that many people do that, but if you were, and you thought, okay, well, Gemini like ostensibly from the outside seems legit. It's not like offshore. It's got KYC. It's US-based. So that feels safer than a lot of the alternatives. And hey, they've got this earn program, and surely Genesis wouldn't rug, or sorry, Gemini wouldn't rug, or that seems to be lower risk than going offshore and punting in one of these DeFi vaults or just earn products elsewhere. So I'm just going to park some of my money in there to get some, percentage returns on stablecoins. And instead, they were just giving it to Genesis, who were then handing out loans left, right, and center to Alameda, Three Arrows, whatever, and eating shit on the back of it. So I feel like it's one of those very unfortunate cases, and I think 2021 and 2022 will forever be like one of the sad bear market years, because so many of the people that got shafted weren't like hyper speculator, I know the risk, I'm just going to punt it, but just like normal people trying to interface with the crypto ecosystem, keep some money on there, earn some, take very conservative risks in the grand scheme of things of trying to get some yield, and just getting completely shafted by this mismanagement as a result. So
yeah, I agree. It's very, very sad when a degen loses it all, it sucks, but you're like, okay, this was kind of like, you could have seen that one coming, but you could have technically, if you actually understood what was going on, you could have also seen, like, we always talked about these yields, right? And we always asked, like, where the fuck are they coming from? I still remember like us talking about this years and years ago when crypto yields were so high, and we're like, this is just a bit of not one. You could have seen that there's some risks, but only if you are actually in crypto and have been in crypto for a while, right? Because otherwise, it just looks like this sector that does really well. It's an emerging tech sector. That's quite cool, and obviously you get a little bit more money because there's a little bit of risk. But like, you can be a reasonable person, kind of fall for this, right? Which is why I completely agree with you. That's quite sad because it hit the wrong people, if there is wrong people to hit. And yeah, because there's really like, there's one thing when you kind of get a bunch of people liquidated, it's not great, but if you trade with leverage, it's kind of what you're going for anyway. But if you're trying to do something that isn't too risky and you pick something and then you get shafted like this, just kind of sucks. It generally threw the space back a couple of years, in my opinion, and that's going to be something that we're going to have to battle with. Like the law of the DeFi stuff is going to struggle in the future also, because of all the shit that happened in the last 2-3 years. I think just in general, like DeFi and CeFi, all of it kind of took a big hit. And now it's basically just a bunch of people speculating on Bitcoin, which is good for my Bitcoin position. But obviously not necessarily what people in crypto want for the entire space.
And good for the North Korean ballistics program, which is taking money from US pockets and putting it into their military budget. So, God, we really need to stop saying that on this show, don't we? We're going to get a knock on the door soon, or a brick through the window, perhaps. GBTC discount to NAV hits lowest level since 2021 as SEC elects not to appeal grayscale ruling. So I think it was down, when this article was posted, it was down to 15.9%. I think at its peak, what was it, like 40 something?
Yeah, I think 40%, yeah.
Yeah, you were wanting to buy that thing, but it never got low enough, Don.
Oh no, I wanted to, but then I was like, I actually don't want to be stuck in a position for that long.
Oh, fine.
But it should have, obviously, in hindsight. Like, that's quite a nice move.
Do you think there's a way this conversion fucks BTC, by the way, in terms of, the discount closes, you convert, and then you just dump physical spot?
Yeah, I've been struggling with that a little bit. Like, I've been kind of going back and forth, because one thing, it kind of clears out a lot of the FUD that we've had, and it's a generally positive thing. But also, as you said, like, there's going to be a bunch of funds being unlocked, right? And I don't know how much of that is going to be sold. So I go back and forth on it, depending on whether I'm bullish or bearish, which makes my opinion on this.
Good. Like, if you're bullish, it's a non-event, and then the second you turn bearish because of some shitty candlestick close, you're like, hey, did you know this whole GBTC torrent tsunami of supply is going to hit the market at monthly resistance? It's fucking over. By the way, the German people are hungrier than ever. It's like, oh God, give me a break. And I'm going to have to be here on Casual Friday pretending that there's intellectual integrity on this show. Be like, yes, this is very consistent and reconcilable with your views last week. Like, Jesus.
But yeah, that's kind of how I look at it. Basically, if I'm bullish, it's good. And that FUD is clearing up, and if I'm bearish, it's bad that we have a lot of the supply overhang.
Man. Yeah.
Ask me again if I'm bearish, and I will tell you that it's bad.
Amazing. Yeah, very helpful. Because a lot of these GBTC holders, if they held through some real shit, right? Like low BTC price on top of the discount. That's a lot of drawdown. Whereas, if that discount closes and that spread converges essentially, plus it takes place at a time where the BTC spot price is higher than it is now, and certainly higher than it was during peak drawdown, that could incentivize some de-risking,
Yes.
So that's an interesting one to watch. Could be a trade there. And as I said, I kept the best for last, just for you, Don. Bitcoin price could rise to $56,000 if BlackRock ETF approved, according to Matrix Port.
Cool.
So
all power to them.
Yeah, all power to them. Yeah, suddenly we like the suits. Matrix Port's estimate is based on analysis of 15,000 US registered investment advisors projecting 12 billion to 24 billion worth of inflows into a Bitcoin ETF. And so basically one of the arguments was if Tether's market cap increases by 24 billion, acting as a proxy for potential ETF inflows, Bitcoin's price would rise to $42,000, representing a conservative estimate. With a larger influx of $50 billion, Bitcoin could potentially rally to 56,000. I'm not sure that's how that calculation works.
No. That calculation is complete and utter bogus.
It's dog shit, isn't it?
But I'm on board.
You can't do that.
And it's always so funny when I see this stuff, because usually it's just completely made up math, and it's like made up numbers too, and you're just sitting there and you're like, I mean, fair enough, just chill people into this shit. I mean, I'm not hating, but also like, what the fuck is this? And I'm like, what the fuck is that? I don't know. It's just quite funny because they have to say or sound smart, like they have to say something smart or sound smart, so they just come up with some bullshit and people buying it. It's quite funny, but yeah, I wouldn't take this with like for the truth any day of the week. But it's just,
that methodology is dodgy, bro. But it's one of those ones where, just like the GBTC, it's like, Don, what do you think of this? Oh, it's great. I agree with them. This is the perfect measurement. And then if you're bearish, you're like, oh, this is what it takes to get people to buy this fiction.
Yes. I mean, that's how it goes. No, this is how you trade.
Exactly how it goes.
It's the secret to trading. Just make it so you make the evidence so that it supports your thesis, not the other way around.
Correct. Yes, that is how you arrive at the truth.
Yes.
Yeah, this is kind of almost stock to flow level.
Oh yeah.
Of I guess methodological rigor for me.
I mean, at this point, we might as well ask, when is stock to flow coming back?
Yeah, I'm sure it never really goes away. That's the problem. So I'm sure it's been back in one form or another. But yeah, there are your TA targets for you, Don. Ignore 30K, ignore 35, 56,000. Then you can say, hey, according to the Tether's market cap increase acting as a proxy for potential ETF inflows, I think I'm going to sell. And then if that works, you're a fucking genius.
Yeah, I mean, I don't know how they even came up with this shit. No, it's quite wild, but
it's pretty creative.
Yeah,
most of the valuation stuff we talk about on this show is basically science fiction, or it might as well be. At least science fiction tends to be more entertaining.
Yeah, how the fuck do you even measure how much any of this should be worth, right? And how much it's gonna go up or down based on whatever. Like, you cannot, like, people always want to be able to, but if there's one thing that I've learned trading for a couple of years is that, like, the markets don't make any sense, right? Like, it's just like, at least not this kind of plain sense, right? It's just basically a bunch of people pressing buttons, and it makes sense if you follow where the majority of money is going, but it's not like, oh yeah, you have this and that, and so therefore, like, you have this and that much TVL or whatever. Like, it doesn't really do that, like, go that way. It just doesn't, in my opinion anyway. Like, you just basically try to follow the money, try to follow the hype, and that's the kind of predictions that you can make. Anything beyond that is just usually made up fiction, trying to make sense of something that just doesn't really make that much sense. So that's my opinion about how all of this works.
I honestly give more weight to TA oriented arguments than those valuations,
Yes.
Which obviously sounds biased and absurd, but at least it's internally consistent methodologically, like the method itself TA wise might be absurd, but it makes sense on its own terms. But this is both absurd and doesn't really make sense on its own terms. But good targets, dollars and longs, so nice confluence there. And the GBTC thing, if you close your eyes, it's not real. That's what we've established there also.
Exactly.
Wonderful. Productive as always. That's it for this week's show. Hope you all have a wonderful weekend. Before you click off, leave a like on this video. It'll be very much appreciated. Leave a comment as well. Ideally, not all the comments this week are about light mode and dark mode, but whatever makes you happy. Thank you to Woo, as always, for supporting the show. They've signed on a bunch of new affiliates recently. If you use their ref link, you are dead to us. I mean, that's hyperbole, obviously, do whatever you want. But nonetheless, links can be found in the description. I think at the moment there's a Q4 update there that's worth being aware of. As always, if you have any feedback, shoot us a DM or leave a comment and we'll get stuff worked on. I'm going to shut up. Have a wonderful weekend and we'll see you next week.
Bye-bye.